Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Wednesday, the 21st of February, starting with the FTSE 100, which has managed to peak. We're basically at the top of the range towards 77.50, and we have the risk of at least a test of the 50-day moving average, 76.20, and below that, the 200-day line, 75.40, but not expecting anything worse than that. Hopefully, we'll get away with a bounce in that area. RSI still above neutral, 50 at 54, so the chance is that today's and yesterday's decline are just a two-day wonder. Break of 77.50 could take us up to 78.30 in the top of that rising trend channel from back in August. Moving on to the DAX, and here still all about the 1700 area, 17,000 area rather, and you'll see that this market has consolidated well in the recent past, and hopefully will then push on towards our appointed destination in the 17,700 area initially, and then maybe as high as 18,000 by the end of next month. The key here is that we stay above the 50-day moving average, 69,800, and ideally above the floor of that rising October trend channel at 16,900 plus. Moving along to the Dow, and here you can see that we've already had the mega run on to the upside. It looks like we're sort of topping out towards 39,000, but at the moment is at least while we're above the floor of the rising trend channel from October, 38,200. The uptrend is still very much in place, and that could take us to 40,000 plus by the end of next month. On the downside, probably the worst we're expecting at this stage is a test of the 50-day line, currently at 37,700, and we're looking at also the RSI, which is still above neutral, 50 at 57, which is actually a very good place for a potential fresh move to the upside. Moving on to Bitcoin, and here the picture is one of consolidation near the highs. It's good that we're above the old January resistance, 49,000, and the longer we stay above that, the greater the chance of a move through 53,000 up to 60,000, and that red October resistance line projection by the end of next month. Below 49, maybe 46 at worst if we fall over. The next market is actually one which has been requested, which is Ethereum, and here mirroring what we've seen at Bitcoin, basically hit the top of that rising trend channel from August at 30,000, or sorry, 3,000 rather, which it was 30,000. Above that, there's a chance of an extra leg to the upside, 3,300, which is a November resistance line projection. On the downside, we're hoping that we won't go anything lower than the 2750 area, which was the old January resistance and has become February support. On to gold, and here it's all about holding 2,000. We've done rather well. We're back at the 50-day moving average, so we've had 3 bounces for this market above the 200-day moving average, and 2 basically on 2,000. Looking for a break of that December resistance line around 2060, and above that hoping for 2150 plus, maybe 2180 by the end of next month. Quite punchy, but RSI now back above 50, so that does help. On to the stocks, and starting off with the stock which we haven't seen for quite a long time, Arcontech. Here you can see that this market is looking rather better than recently. We've had the same kind of rebound as we had back in October, so an unfilled gap to the upside. End of day close through the 50-day moving average around 93 pence, and we could be hitting that resistance line projection from last year, which is currently pointing as high as £1.10 by the end of next month. So let's see if shares can deliver on the upside, basic rising trend channel as I am drawing at the moment. Next stock is Ceres Power, which had quite a strong push to the upside quite recently. Here you can see that we had that rally back in January, but we're just giving it all away. Having another go now with a slightly higher low and a bear trap per rebound from below the initial February support there, £1.64. If we can stay above £1.64, we have a chance at least of moving up to the 50-day moving average at £1.87. Another stock which had a blip to the upside was CMC Markets, and here full gap to the upside in January, same for February, and that means that we're still looking for the somewhat unlikely sounding target around £2.10, hopefully as soon as the end of next month. Be cautious, obviously, wait for a recent resistance around 173 to be broken before assuming that we're going to go higher. Otherwise, it may just be that we are finding resistance at the old April-June highs from last year. Corcel is next, and here we had a coverage of this stock yesterday, and suggesting that it was looking well poised for a fresh leg to the upside. What we were looking for was an end-of-day close through the 50-day moving average, and we got that. Now we're looking for a retest of January-February resistance of 1.13 by the end of next month, or hopefully much sooner than that, while we remain above the 50-day line. Deltic is next, and here given the stock quite a lot of coverage, and it has rewarded us in terms of the technicals. Bull flag resting on the first chart target there, around 34 pence above that, looking for 45, and that March 2023 resistance line projection. 88 Energy is next, and here the picture is one of quite a decent turnaround. Actually, we saw the shares push through that resistance line there from this time last year. Nice rebound on the rising 50-day line. That suggests that our 0.45 target that we were looking for by the end of next month is on its way. If you're cautious, you wait for an end-of-day close through the 200-day line at 0.32, but it looks as though there is a turnaround on its way there. A massive rug pull for a predator yesterday, which may prevent the company delivering a quick funding situation, but here at least the shares have bounced on that line there around 8.3 pence, which is what we wanted them to do, and above that, hopefully, initially the 200-day line just under 11 pence, and then filling the gap maybe by the end of next month, with the key here obviously holding that uptrend line from this time last year. Very good to see URA Holdings turn around. Here there's been a decent push with two unfilled gaps to the upside, one for January, one for February, so that did suggest that we were on our way. Initial target here was around 1.9 pence. Above that, we were looking for 2.3 pence, and hopefully we'll get that over the next day or two. Above 2.3, it is up to the post-summer highs, as high as 2 3/4 pence. The last two are coming up next. First one is Windward, and here the progress within a sharply rising trend channel, top of that channel heading for £1.40, and we're looking for that while we remain above recent resistance around £1.16, so doing well there. And an MRE upgrade from Zinnwald today has done the trick in terms of the share price, which seemed rather sluggish ahead of this, but here we've had a bear trap gap reversal, so gapping up off the low above the 50-day line there at 6 3/4 pence, looking for the 200-day line as high as 8.9 pence. Hopefully in the next week or so. That's it for me today. More updates tomorrow.